Investors page. We're going live again here today. The topic that we're going to discuss, we don't have a guest with us today, but as a group, we're going to discuss the probably biggest topic that we encounter on a daily basis when talking to investors for the first time. And that question is always, should I wait for prices to come down? So over the last, 15, 20 years, we did have this big drop back in 2008, 2009, 2010, where we had prices that fell off. And the big question going into the future is that going to happen again? And should I wait? So I'm going to, have Frank run some of the numbers and talk to us a little bit about that further. But we're just going to address that topic. Should I wait? And what impact do the numbers have on us? So interest rates at the same time. If they go up, what do they go up to? As a whole, are you guys seeing in the last 8 to 9 months, what are interest rates doing? Anybody?
They're going up.
Yeah, they're going up. So as of January 1st of this year, New Year's Day, we were getting this question back then. What were interest rates on New Year's Day of this year?
By the way, you guys are all muted, so if you want to speak, we're not going to hear
you. So what were interest rates as of January 1st of this year? Anybody? Doesn't have to be exact, just an approximate.
Right below 3, right?
Yeah, I'm going to say about 2.75. About 2.75%. We were below 3, and I don't know about you guys, but I was standing on my pulpit screaming to everybody, these are the lowest interest rates we're going to see in our lifetime. Take advantage of it. Not everybody was listening. So here we are today. We're not even a year later. What is it? September 1st? Is that the date? I don't even know what today's date is. Yep. September 1st.
September 1st.
So we're 9 months later. What are interest rates? Well, actually, we're 8 months later. We're not all the way through September. We're 8 months later. What are interest rates today on that same 30-year fixed product?
5 5/8.
5 5/8. So what impact does that have for us, Cheech, on a mortgage? Let's just start there. We'll talk about prices going down in a minute, but let's just talk about what impact did those people that wanted to wait.
Let's say you bought let's say you're borrowing $400,000.
Okay.
And you're borrowing it at 3% in January. Your payment's $1,686.
Okay.
All right. And let's say you're borrowing it today. Your payment's $2,302.
So that's a difference of $616 a month.
Right.
So when we're talking
over 30 years, that's a difference of $221,000 in interest.
Okay. So when we're talking to investors, what is the number one thing that they're always looking for? Is it, I want a low interest rate? Is it, I want a lower price? Or do they all say, I want what?
Cash flow.
Cash flow.
Cash flow.
Cash flow is the number one thing that they're saying. So if I could have purchased back in January, but I waited until September of this year, what did I do to my cash flow?
Squeezed it.
I squeezed it. I made it go down. And the reason I did that was because I was waiting for prices to come down. I want the price of this property to come down so that I get better cash flow. But all the while, interest rates are going up, and it's destroying our cash flow because interest rates play a much bigger role than the actual price. What is that saying that we hear all the time from financial advisors? It's like marry the mortgage or marry the property, date the interest rate or something like that. How does it go?
Date the interest rate, right.
Date the interest rate, because ultimately you're getting a loan, but you can always refinance if interest rates come down, if you're able to buy it at the right time. But that property price, it doesn't play nearly the impact as what the interest rate does. So let's take and just talk about something that's super simple. What do we see on average when prices go down? What are we seeing them go down? What if we're seeing a decrease in price? If we're seeing an increase on average at
I haven't seen
3%,
a decrease in price in so long, I'm not sure.
yeah,
I haven't seen a decrease in price. What I'm seeing is longer time on the market
okay.
where they're not flying off in 48 hours.
Yeah, you're not getting as many multiple offers, but you're not seeing a decrease. Well, we're not in a buyer's market, and it's a long ways off
So,
for us to be in a buyer's
well,
market.
let's be fair to the average investor out there. If over the last 100 years the average appreciation has been 3%, let's play by the same rules and say that the price going down also goes down 3%. So what was the price of the home we're using? 200,000.
400,000.
400,000. Okay, so 400,000. Our price goes down 3%. What are we talking about now? That's what 12. No,
Basically, you've got to basically $400,000. You've got to wait. If you're going down 3%, you've got to wait over almost 4 years before you get to a 10% drop. And rates going up 1% is the same thing as a 10% drop.
Sure.
And we'll see the 1% easy. We've seen it already this year 3 times.
Well, let's not get that deep into it. Let's just talk about today. If the price of that $400,000 home dropped 3%,
3%.
how much is that?
It's 388.
So 388 is our new loan amount. But remember, our interest rates went up during that time. So 388 is our new loan amount on that $400,000 house. What is it based on today's interest rates?
Based on today's interest rate at 5.625. Now, I was using just consumer rates, not investor, but the same concept.
Sure.
You're at $2,233 at 5.625, 5 5/8.
Now, if I ask you this question, is that payment, even with a 3% drop in price, is it still higher than what the payment was if you would have just bought it full price back on January 1st?
Yeah.
It's higher, isn't it? So why are we all sitting around waiting for prices to come down?
And here's the thing: investors should be buying now, and if the rates come down, they can refinance into a better rate.
Sure.
However, if the rates go up, they're going to have less cash flow.
There you go.
That's your bottom line. And if you look at our market, let me just, I'm going to share my screen for a minute, if that's all right.
Please do.
All right. Okay. This came from MegaCamp the other day. They pulled these off. But we always talk about the medium interest rate being 6%. That's the 5.97. That's based on historical averages from 1990 through 2021. And if you look back from 72, the actual medium rates are 7.81%. All right. We've been playing in a market that's just unbelievable.
I agree.
And at 2.96%. I mean, was an unbelievable market. That's not your norm market. So, and we know now the government's telling us that they're going to push the rates up dramatically because they need to put a stop to inflation. So we're going to see increases going on. Here's the thing: are we in? This is inventory for our entire MLS right now. It says you have 1.4 months of inventory. What does that mean, guys?
That means we're in a seller's market.
Well, I mean, what does the number 1.44 mean? Does I know you know. Does anybody else understand what that number means?
If no new houses come on the market, we have 1.4 months before we're sold out of all of our inventory.
Yeah, we have 1.4 months. What number do we look for an equal market? Not a buyer's market, not a seller's market. What'd you say, Scott?
6.
6. Yeah, it's between it's 6 is what's considered an equal market. All right, we're far from an equal market. 1.4 months of inventory means we're in a total seller's market still. Now, granted, you see this curve here. We went from 0.9 to 1.4. And that's what Scott was talking about earlier. Seeing a little longer on the market, seeing less multiple offers. But the houses are still selling. Houses aren't dropping dramatically in price. They're pricing them for the market, but they're not dropping. Does that make sense?
It does. Now, if you live in a market like California or something like that, where we have high peaks and valleys, we don't experience things the same way as some of those really, really high dollar markets. Why is that?
Our market is so much more stable. We never shoot up when the market, I mean, when the market's going like this, we're going like this. And when the market's going like this, we're going like this. Blaise and I have been through markets like this now. So, well, you got it in 97, I got it in 87. So we both been through multiple times of this happening. And we're Northeast Ohio is a much stabler market. We'll feel the slowdowns. That's why you need to be working out there. But
we don't get the nice weather. We don't get the blue skies, but we do get consistency here in Northeast Ohio. Our rivers occasionally catch on fire and things like that.
It only happened 6 times. Come on, plus on the Cuyahoga.
But ultimately, I mean, if you want to be in a market from an investment standpoint that is safe, this is one of those places. And waiting for prices to drop to the point where it really makes a difference. The only time I can remember that happening was back in 2009, 2010, when we had those huge numbers and the rest of the world did way worse than we did. But if you're looking
even then, our drop off wasn't anything in comparison. Well, and so if you're watching the national news, you're going to see horror stories. If you're watching the local news or the local numbers, and you guys should be the economists to our clients. I mean, really, let them know what's going on here.
Right. What sells news? Big headlines. So talking about the world ending and all that stuff is what sells headlines. But what caused that 2009, 2010, 2008 drop in prices was what? Bad lending. We did lending where basically if you could fog a mirror, you could get a loan. And you guys new to this real estate world may not remember that, but those of us that went through it, we're not doing that anymore. Lending guidelines and policies are so much stricter. I don't get the gut feeling that we're going to see that type of drop because of just bad lending the way we did back then.
Yeah.
So again, I think the answer to that question time and time again is, should I wait for prices to decrease before I make a purchase? Well, heck no. If you just waited between January 1st and September of this year, you lost $616 a month in interest rate increases. And if inflation's going up, which it is, does anybody see inflation stopping anytime soon? I don't.
I'm trying to put the brakes on it by raising rates even higher.
Right.
So that's the only tool they have.
I'm looking at a chart here next to me that it basically shows if inflation is going up, right next to it is home prices going up. And as long as we're seeing inflation continuing to rise, we're not going to see a drop in these housing prices, at least not in our market. We may see a raise in inventory.
And as long as we have a shortage, and as long as we're down to 1.4 months of market inventory, we're going to see prices of houses go up, not down.
So just like in January, we were standing on our soapboxes screaming, these are the lowest rates in history. We should still be standing on those soapboxes saying there's only 1.7 months of inventory?
1.4.
1.4, even worse. There's only 1.4 months of inventory, so we're still seeing the multiple offers on properties. We're still seeing the competition. Until that number starts to creep up to 6%, we're not going to see a big change in prices or anything. And if you're waiting for that big change in prices, all the while, interest rates are going up and you're losing. You're losing on the number one thing that you're asking for.
Think about it. 6% doesn't mean it's a buyer's market. So
no.
You're still not, at 6%, you're still not seeing a decrease.
That's just the tipping point.
You're just at an equal market at that point.
Right.
So we've got a long ways to go before it's a buyer's market. Not to say that someday we won't have a buyer's market, but we've got a long ways to go.
And another detail you guys kind of touched on it is like regarding the interest rates. The interest rate like today might have gone up from 6, 7, 8 months ago, but in the grand scheme of things, interest rates are still very low. So while it is a short term memory issue of you could have had 2.75, and with inflation and everything that you touched on previously, there's still a long ways to go for interest rates of climbing before it becomes much worse than it has been in the past.
Absolutely, good way of putting it, Corey. Corey, you see back there, I got in the business in 1987. See where rates were?
My memory doesn't go that far back.
What year were you born, Corey?
Back in '84, it looks like 13.75.
Yeah.
I mean, so
in fact, when I got in the business, there was a refinance boom because it went from 12 to 10.
it's just overwhelming how much it tips in favor of buy now versus trying to wait for that price decrease that everybody's hoping for. So if you're an investor watching this, that's what we're going to be explaining. But if you guys are newer to the industry and stuff that are on this call as well, realize these are numbers that maybe you didn't experience in your lifetime, but we've seen way worse, those of us that have been around a while. And it's important that you talk about these statistics to really drive home where we're at in this market. Because if you go back to when interest rates were at 2.5%, how many first-time home buyers were actually winning and securing a 2.5% interest rate? Practically none. So those same borrowers, those same first-time home buyers that were trying and losing to other offers back when interest rates are 2.5%, they didn't go anywhere. They just have to recalibrate and rethink. So all of our homes still have a huge demand and that low inventory. So those people that couldn't buy back then because they were getting outbid, they still want to buy, and they're still out there competing to buy up these investment properties, to buy up the single families and have owner occupied and things like that. So waiting right now is just not an option that I would preach to any of my investors, because we don't see any indication of something coming down in prices enough to offset what we're seeing in increases in inflation and with interest rates. And if there's no other questions, let's go ahead and end this live. Anybody got anything else they want to throw out there? All right, I'm going to go ahead and end this live feed, and we appreciate you guys all joining us today.